We have Manisha Gupta joining in. She's going to take us through a conversation with David Lennox. Manisha, over to you.
Thank you for that, Ekta. Well, yes, David Lennox of Fat Profits now joins us on the show to talk further about commodities. And David, welcome to the show. I want to start with metals because we have seen extended decline onto this one. The overall economic data that has come in from China, starting right from industrial production to import numbers, investment in real estate, new home sales, everything is come in less than what the street was working with and less than what it was in the last year. How are you looking at these numbers and what's your sense on the impact of metals that we've seen?
Oh, good afternoon. And certainly, yes, there has been a big change in what we're seeing coming out of China. We are now starting to see perhaps the first signs that their economy is slowing from the burst it got from its COVID openings of earlier last year. So overall, we do believe that when you have a look at what's happening inside that country, there will be, yes, a slowdown, but we are fairly certain that the Chinese authorities who have that 5% target will be starting to look at what levers that they can pull to start re-stimulating their economy. And that's why we believe we haven't seen a significant fall away in commodity prices at this point in time. The markets are still quite sure that the Chinese authorities are going to do that stimulatory work, and that will probably start to see numbers that we have seen weakening start to perhaps turn around. So overall, we're expecting a little more volatility to come into the metals prices if we do start to see the Chinese authorities tinkering with their credit ratings and their credit policies. That will certainly put a little more support under the metals prices. So expect that volatility, but at the moment that big story broke and it is causing some concern for traders, and we've seen the metal prices react to the downside.
Absolutely. David, also the strength in US dollar index has been yet another factor to watch there. But for copper, essentially, I mean, we saw 7-month highs in the month of Jan. We were trading at $9,500. We are trading at $8,200 right now. Any price view that you have on this?
Look, certainly, yes, we saw that copper price reacting to the news that the auto industry was going to consume considerable amounts of copper. We saw the US dollar weaken a little bit at the earlier part of this year, so that gave it also a second wind. But we have now started to see a little more realistic pricing come in. The US dollar continues to, unfortunately, not weaken any further, but it's holding its ground and perhaps rising a little more than we expected. So that's putting a headwind against the copper price. And of course, yes, the auto industry, the change is coming. We are seeing significant build-ups of manufacturing capability across the auto industry for electric vehicles. Not quite with us yet, but certainly it's coming. And again, one has to look at what the copper price has done. Yes, it's come off its highs, as you say, but it hasn't given up a lot of ground as yet. So we do believe that there is underlying strength in that market. And again, it has to do with, will China start to re-stimulate its economy to get that growth up?
David, is there anything at all in metals that you would recommend buying right now, or do you think there is still more downside remaining here? Because copper is not the only one. We have zinc trading at a 25-month lows. You have aluminum near a 5-month lows. Iron ore, steel prices at multi-month lows as well.
Oh, look, yeah, there's no doubt about it. They're all reacting to the same story of China. Yeah, it is a big consumer of metals, and they're also reacting to that US dollar as well. So when you've got those two headwinds against them, then one would expect to see the commodity prices across the board weakening. We still rely on the fact that if you have a look at the inventories, they are still critically low across a number of them, including copper. So that does tell us that there is still some underlying strength inside those markets. But one would have to think that if we start to see further activities in terms of what's happening inside the auto industry, then we will start to see those copper prices recover, and more broadly the base metal prices. But it really does have to do with the US dollar. We think the China story will be dealt with the authorities levering their economy, but the US dollar tends to remain that problem, and at this point in time, it's keeping any significant rally to the top side in commodities somewhat checked.
Clearly that. I also want your sense on the crude oil prices because we are looking at pressure continuing here and the markets are going to watch out for the G7 meeting in Japan now, which is in 20th to 21st May, if I know the dates correctly. And with the G7 and the Europe now talking about sanctioning the third countries, including India, which are buying from Russia and selling refined products to Europe and US as well. There could be sanctions coming on this. That is something that the crude investors are watching right now.
It certainly is. And again, that's the big story that we've seen starting to come out of the crude markets is that the secondary sanctions that may come into play, that would mean that a number of countries would see the supply of oil that they are getting through various avenues from various customers, especially from Russia, would perhaps change. Whether or not those countries change their buying habits, we have to wait and see. So that's very much a matter of, as I said, wait and see story. But the markets always believe on the pessimistic before they believe on the optimistic. So we're seeing that pessimistic flow through, that there is going to be disruptions again in the oil markets, and that's really what's starting to see the oil prices move further to the south. Throw in the fact that, yes, China again having some problems with their economy, a big consumer, that's adding to the headwinds. And of course, we still have bubbling away in the background the recessionary fears inside the US as the Federal Reserve continues to look at pondering whether or not they will continue to raise rates. That looks as though that's probably going to continue. So those recessionary fears are there. So overall, it's a pretty glim picture when you look at the oil prices. But again, you'd have to suggest that they haven't collapsed. You know, they're still trading at, for Brent, 74 1/3. So that's a price that we would suggest is not a damaging price to the downside. So one would suspect that, again, markets are trying to perhaps bet each way that there is going to be activity in China to stimulate, that perhaps we won't see a recession inside the US, and the oil prices should continue to the high side once we've got all this nervous news out of the way.
All right, Manisha as well as David, thanks very much for joining in and taking us through the commodity space. Well, we do have some numbers and